Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin, and I'm just going to be reflecting on 2023. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. As investors, we often will come up with different theories, some of which pan out, some of which do not. But I do think it is worthwhile at various points, and of course at the end of the year is a great time, I think, to carry out this exercise, but to sort of think back on theories and to be honest about which ones have panned out this year and which ones have not. And I think by going through this exercise, it can make investors, more humble, help you learn a lot, help me learn a lot. So, at the end of the day, this video is probably more for me than it is for you. But I just want to sort of document what I thought going into this year and just look at really what happened. And so what I'm going to try to do is, for everything that I think went the way that I thought, I will try to provide another example of something that did not go the way that I thought. Because the truth is that I think we're all really good at sort of figuring out what we thought or what went in the way we thought and sort of trying to move everything else under the rug, right? So I think it is a useful exercise. So the first thing I will say is sort of coming up with something that did not really pan out in the way that I thought. My speculation at the beginning of this year was that Bitcoin would spend about half the year going up and half the year going down. And my reasons for that were basically just looking at history and looking at pre-halving years for Bitcoin, looking at 2011 and seeing about 6 red, 6 green months, looking at 2015, seeing about 7 green and 5 red months, looking at 2019 and seeing 6 red and 6 green. I'm just saying, well, if it plays out like it normally does, then I would expect about half red and half green. I also want to say that at the end of the video, we might speculate a little bit or throughout the video, we might speculate a little bit on 2024, but that's not really the purpose of this video. So going into the year, I was looking at this and saying, all right, well, normally what happens after a bear market year, and you can see that bear market years are fairly well characterized as about 8 to 9 red months, right? 2022, 2018, and 2014. And so historically, after a bear market year, you get a year where the market goes about up half the time and about down half the time. So clearly that view was wrong, right? That view was wrong. And so it's important to say that, right? Like, I'm not here to pretend like, I called that correctly, because it didn't. I thought half up, half down, and it did not play out like that. And we put out a video the other day, sort of looking at it a little bit closer. And if you average out, let's say you average out 2015 and 2019 for Bitcoin, you get something that looks like this. And you can see that this year really outperformed what happened in the average of the last 2 pre-halving years. And so I started thinking, well, does it compare better to other years? And it turns out that it does. If you actually add the average of all halving years or election years, you can see that Bitcoin has actually tracked that a lot closer than it's tracked pre-halving years. So the 2023 pre-halving year has behaved more like a halving year in terms of returns than prior pre-halving years. And you can see that it actually has tracked these prior halving years relatively closely. If you pull up 2012, it's basically doing exactly, so let me pull up here's 2012, right? You can see that Bitcoin is essentially at the same price or at the same year-to-date ROI by the end of the year in 2023 as it was in 2012, which was, almost a decade ago. If you look at 2016, you can see that 2016 was actually lower than where we are today. And then if you look at 2020, you can see that 2020 was higher. So when you average all of them out, you get something that looks like this. Something that looks like, let me grab on here, 2023. You get something that looks like that, which essentially kind of indicates that price action this year has more so resembled halving year price action than it has pre-halving year price action. So that is not something I was anticipating. Although I think you could make rational, I mean, you could come up with narratives to support why it should have been. You could point to, say, the spot ETF hype that is theoretically going to be resolved within the next couple of weeks as a reason that Bitcoin rallied into the end of the year. If you remember back to the Ethereum Bitcoin valuation in 2022, normally it drops in bear market years, but it actually rallied at, in sort of Q3 of the bear market year, potentially due to the merge, right? And so I suppose when you have these narratives or these events, that can change typical behavior. A counterpoint to that narrative, though, is looking at Bitcoin with regards to interest rates, right? So we can always come up with a narrative to explain why something happened, right? And we could say, all right, it's the spot ETF. But a counterpoint to that, and I'm not saying that the spot ETF narrative is wrong. I actually think there's probably a lot of validity to it. But just to sort of think about something to chew on is looking at interest rates. You can see that after the bear market year of 2018, Bitcoin rallied really until just before rate cuts began, right? It didn't really top out until about a month before rate cuts began. And so perhaps that is another narrative that could be used to justify it, is that, well, we still haven't seen rate cuts. And frankly, we're probably not going to see rate cuts at least for another, couple of months or so. Potentially by March. I mean, it could be as early as January, but unless the unemployment rate comes in extremely high in January, it's more likely to be potentially a rate cut in March. That's another narrative, right? Is it based more on monetary policy, or is it based more on this spot ETF stuff? So I think I can say, regardless of what the narrative was, or what the narrative is, or what people want to believe, Bitcoin did not spend half the year going up and half the year going down. It actually spent 9 of the 12 months going up, assuming that December closes green. Which, again, I mean, with Bitcoin, nothing is really ever a safe assumption, ever. Yes, Bitcoin could close December red if it were to drop a lot in the next day, but there's still a good chance that it closes the month green, and a really high probability that it closes the month green. But if it were to close the month red, it would still be 8 green months, right? So there's no way to really look at this and say half up and half down. That theory was wrong, and it's pretty clear when you look at the chart and compare it to prior halving years. So that's one thing, and I just want to go ahead and say that's one thing I got wrong, and that's okay. The next thing is the Bitcoin dominance. And this is something that I've wrestled with a lot, especially given where we are within the cycle. But Bitcoin dominance, if we think back, it's easy to look to see what happened over the last 3 weeks to sort of conclude whether it was a good theory or a failed theory. But if you think about what we said, or what I said back in early 2023, the expectation was that Bitcoin dominance would go up throughout all of 2023, no matter the direction of Bitcoin, right? So while I did have one prediction that was Bitcoin goes up half the year and down half the year, the other prediction was, regardless of what Bitcoin does, dominance of Bitcoin should go higher. And one of the ways that we can visualize that, and one of the reasons why I said that, there's actually 2 main reasons why I thought dominance was going to go higher this year. If you look at Bitcoin dominance without stablecoins year-to-date ROI, this is what it looks like in 2023, okay? And if you average out 2015 and 2019, you can see that, just looking at the last 2 pre-halving years, it stood to reason that, all right, there's a good chance Bitcoin dominance will go up in 2023. And yes, it is true that the last 3 weeks dominance has actually pulled back, somewhat. I mean, a counterpoint is, it literally just pulled back to where it was a couple of months ago. But if you exclude, if we sort of look past just the last 3 weeks, I think it is safe to say, I think it's fair to say that it was right to be bullish on Bitcoin dominance this year, right? It was very right to be bullish on it. If you think back to early 2023, there were a lot of people. I don't really remember many people that were bullish on this thing. A lot of people were calling for it to crash down to 20 or 30%, but it never did that. And really, every single time throughout the entire year that Bitcoin dominance, spent some time going down or consolidating, it led to a lot of people thinking that the move was over. But then, given enough time, it just continued higher. And it literally just put in a new cycle high in December. Like this month, it has put in a new cycle high. So I think it has been fair to say that that theory has been proven correct, right? Bitcoin dominance would go up in the pre-halving year. And a great way to visualize this is to just look at yearly candles, right? I mean, instead of looking at what's happened in the last week, because that can often cloud our judgment, if you look at yearly candles, you can see the dominance started the year off at 42%, and now it's at 51%. And perhaps we'll finish the year, it could be just right around this level, could be a little bit higher, could be a little bit lower, but was a pretty good year for Bitcoin dominance, as most, but not everything, has bled back to Bitcoin. Now, if you were to look at alt Bitcoin pairs over the last 2 months, then you might be scratching your head as to how the dominance theory has been correct. But again, if you compare those altcoins, or a majority of those altcoins, to where they were 12 months ago, they were a lot higher on their Bitcoin valuations for the most part, although there are a few that outperformed. But that was one of the theories too, is that while Bitcoin dominance will go up, there will be a few altcoins that outperform Bitcoin, just like there always have been, and likely just like there always will be, even in pre-halving years. Even when macro trends are intact and dominance is going higher, it doesn't mean that some altcoins cannot outperform. So I'd say that is a theory that really panned out and was not a consensus view at the beginning of the year. Now, to keep myself honest, rather than go on about that, why don't we sort of pivot back to something that did not go the way that I expected? And one of those things was my expectation for Bitcoin going into this year was that 35K would likely mark the yearly high, right? 35K. And the reason I said that was, oftentimes in pre-halving years, Bitcoin can get a bit of a rally, right? Like it can rally up. In 2015, it rallied up about 80-90% or so. Like I think from this low here up to this level, yeah, about an 80 to 90% rally. The last pre-halving year, it rallied about 343%. And if you look at year-to-date ROI for Bitcoin, and again, you look at the average of 2015 and 2019, it would equate to about 2.1x off the yearly open as to the high point, right? About 2.1x off the yearly open, which the yearly open for Bitcoin was around 16K or so, but 2.1x off the yearly open would put Bitcoin at around $35,000. Today, the price of Bitcoin is $42,000, right? So while I did think Bitcoin could go up some in the pre-halving year, in line with the expectation that we spend half the year going up and half the year going down, I did not think it was going to go much past 35K. Really, I didn't think it was going to go past 35K at all. I thought 35K would sort of be the upper limit for Bitcoin in 2023. But you can see that Bitcoin far surpassed even my expectations. And while I talk about what I think is going to happen with Bitcoin, I will remind you, my strategy with Bitcoin is only dictated by the risk of Bitcoin, the risk metric that I use. So, I talk about, is Bitcoin going to go this way or that way? And I will continue to reiterate, although a lot of people don't think it's true, but I will continue to reiterate that my strategy has nothing to do with where I think Bitcoin's price is going in the short term. If the risk on Bitcoin is below 0.4, then I'm a buyer. If it's above 0.4, if it's between like 0.4 to 0.6, then I kind of just sit on my hands and do nothing. And if it's above 0.6, then I might start taking some profits. That's all I do, with Bitcoin. And I'll discuss where I think it's going, but it doesn't even mean I'm necessarily capitalizing on it, In fact, going over to something that was predicted, that sort of to go back to something that I did get right. If you guys remember back in the summer, one of the things that I said was that a lot of times what happens with the S&P 500, right? So if we look at year-to-date returns for the index, right, the S&P 500, what happens normally in Q3 of pre-election years is you get a seasonal correction. And it is that seasonal correction which tends to knock Bitcoin below its bull market support band, right? So the bull market support band for Bitcoin is simply made up of the 20-week SMA and the 21-week EMA, right? And I was essentially just pointing out, hey guys, what normally happens in Q3 of the pre-halving year is Bitcoin falls below the bull market support band. It happened here in August of 2011. It happened here in August 2015. It happened last cycle in September of 2019. And so the theory was just simply, hey, what if it happens again, right? What if it happens again? And sure enough, it did. In August, Bitcoin broke below the bull market support band. And this was not a popular view. There were a lot of people that were not expecting a pullback this deep, okay? And it did, right? It fell, but it did not take out this low, okay? So that's a clear distinction that's clearly different than what happened over here in 2019, where it did take out that low, right? You can see this wick right here went a little bit lower than where it went right here in June. And so it sort of set the precedent for a lower low. We then put in a lower high and then another lower low. Whereas over here, we did not put in a lower low. So I would argue that this view of a seasonal correction in the S&P 500 in Q3 of the pre-election year would cause Bitcoin to fall below its bull market support band. I would argue that view was correct, right? It was. We did get a pretty big sell-off. I even talked about how Bitcoin would likely get a rally after its death cross, right? So once we got the death cross, I said, all right, well, in the short term, normally after you get a death cross, Bitcoin rallies into it, right? And it did, right? I mean, it even got a little bit of a sell-off going into it, and then it rallied into that death cross. However, again, going back to the previous thing that I said, my general expectation was that 35K would mark the yearly high, and we ultimately broke through that. So there's a bit of things that I got right in that, a bit of things that I got wrong, but I mean, if you've watched the channel this year, you'll be fully aware of all this stuff. And again, this is more so for me than it is for you. I mean, I hope that maybe, throughout the years, I can come back and watch these sorts of videos to be like, look, you were really confident about that thing and it turned out to be right, but you were really confident about this other thing and it didn't happen. And so perhaps in the future, you should, consider that, hey, perhaps it'll deviate from your expectations. So there's a few things in there, right? There's some things that went right, some things that went wrong. This one, the next one is really based on, it does go back to the Bitcoin dominance, for sure. And I think that it would be a fair statement to say that going into 2023, almost every single person on Twitter was bullish on Ether, Bitcoin, okay? Maybe not everyone, but a lot of people were very bullish on the Ether Bitcoin valuation. And in fact, in the merge, going into the merge, I have never seen so many people calling for the flippening. But what I said back then was that this is likely a distribution phase for the Ethereum Bitcoin pair, and that Ether will likely spend all of 2023 going down against Bitcoin. Now, every single time I made a video on the Ether Bitcoin pair in 2023, I saw all sorts of comments saying, you're wrong, it's going to go back up, just you wait. And then you take a step back and you're like, well, here's 2023, it went down all year, right? So this is one of those views that I really pushed back on a lot of people to say, and again, the reason why so many people were bullish on the Ethereum Bitcoin valuation this year was because of the deflationary aspect, right? I mean, I cannot tell you how many times I debated this with people over and over and over again, that their argument was that it would not go down this year because of the deflationary because of the deflationary aspect, right? But my point back then was that doesn't matter, right? Like it can still go down even if it's deflationary, because the deflationary aspect only tells you one side of the equation. It only discusses the supply side. It tells you absolutely nothing about demand. Now that's not necessarily true. I mean, if it's deflationary, then it does imply that the network is being used. So you could argue that there's some elements in there that it does imply something about demand. But regardless, if we were to simply look at monthly candles of the Ether Bitcoin pair, it's been a really bad year. And in fact, if you were to change this over to the Heikin-Ashi candles, every single candle in 2023 is red, right? So while there was a lot of pushback on this view, it was ultimately the correct view to have, that the Ethereum Bitcoin valuation would bleed in 2023. Now, of course, I've set targets for Bitcoin dominance. I've set targets for the Ether Bitcoin valuation. But again, being bullish on Bitcoin dominance in 2023 has been correct. If you can look past the last 3 weeks, right, which is still just basically a retrace back to where it was 2 months ago, and being bearish on the Ethereum Bitcoin valuation has been the correct view as well. And so these are things that I really struggled with early on in the year, because it felt like the people that once really appreciated my content when I was bullish on the Ether Bitcoin valuation, they were not appreciative of it anymore, because if I wasn't bullish on it, then I was somehow against them. But it was never personal, right? As I said back then, it was never personal. It's just to say, hey, this normally happens. And if you go look at monthly returns for the Ether Bitcoin pair, if you look at monthly returns for it, you can see that in 2019, the last Bitcoin pre-halving year, Ether Bitcoin went down, like 8 of the 12 months. And here in this year, you can see that it went down, 7 of the months. So while Bitcoin USD went up longer than I was expecting it to, Ether Bitcoin pretty much did what we thought it was going to do. And once we got over here to June, I said, look, guys, look at 2019. Once we got to June, it was red for the rest of the year, except for 2 green months. And that's basically what we've seen again, right? I mean, December is on the verge of being red, and who knows, maybe it'll even close green. But it has been the correct view to be bearish on the Ether Bitcoin valuation this year, even though it was never a popular view coming into this year to say anything remotely close to, hey, maybe Ether Bitcoin is going to go down this year. So I think that is something that I can point to and say, hey, that was a good, that was something that panned out, especially under other circumstances where other things did not. There were some other things as well. One of the things I said this year is that while Bitcoin, oftentimes in pre-halving years, Bitcoin does not put in a new low, although it has before in 2015. But I said that even if Bitcoin does not put in a new low in the pre-halving year, a lot of altcoins will. And that was true. I mean, we saw a lot of altcoins putting in new lows. And I know it doesn't feel like it today, because a lot of altcoins have rallied a lot since October. But a lot of those altcoins were putting in new lows in October or in June, right? So, like, for instance, like ADA, it legitimately just put in a new low in June, which is interesting because Bitcoin did not, right? And it put in a new low in June. If you go look at something like Polkadot, right? I mean, it was putting in a new low as recently as October, right? Avalanche put in a new low, right? As recently as September. So a lot, and again, they've rallied a lot the last few months. I'm not trying to diminish that aspect of it, but the idea of a lot of alts going and putting in new lows throughout the year was valid. And that was why I was very bullish on Bitcoin dominance, because, hey guys, while Bitcoin can go up, it can go down in the pre-halving year, a lot of altcoins just keep going down. And I do, and can put in new lows even throughout the entire pre-halving year. And last cycle, a lot of altcoins put in new lows in the halving year when we got the pandemic drop. So that is the risky thing with altcoins, whereas Bitcoin tends to stand the test of time as the years go on. A lot of altcoins can just sort of fade into the depths of the cryptoverse, never to be heard from again. And a lot of them can put in new lows when they really, if they were following Bitcoin, they would have no business doing so. I mean, if you think about what Bitcoin was doing in June of 2023, I mean, it was essentially putting in a new yearly high. During that same time, during that same month, you have a lot of altcoins that were putting in new yearly lows. So, I mean, it does show why the dominance theory has been a useful theory, and sort of why I went into this year keeping my own portfolio Bitcoin heavy as opposed to altcoin heavy. It was because I just thought Bitcoin dominance was going to go up, and I thought alt Bitcoin pairs, for the most part, would bleed. One thing that we discussed, and this was more so a 2022 prediction, but we didn't really find out if it was valid until the end of 2023, and that was essentially that the terminal rate for the Fed would be 5.5%. The prediction started off as like 5 to 5.5%, but once it became clear just how far behind they were, I changed it to instead of 5 to 5.5%, I just said, all right, I think the terminal rate will be 5.5%, and that panned out. I mean, if you were to go look at interest rates, U.S. interest rates, we can see that 5.5%. And I mean, it's hard to say if the CME Group stuff will be right or not, but it certainly looks like they're not going above 5.5% this year or in 2024. I could be wrong, right? I mean, perhaps this is an example of me patting myself on the back prematurely, because I think the terminal rate, I thought for a long time the terminal rate would be 5.5%. And the reason I thought that was because I really thought that they needed to get well above inflation. And if we were to overlay the U.S. inflation rate year over year onto this chart, you can see that they've done that, right? I mean, they've gone well above that. And in fact, because they've gone well above it, another interesting thing to look at would actually be the interest rate minus the U.S. inflation rate year over year. And if you look at something like that, you can see I was playing around with this at one point in the past. If you look at something like this, you can see that basically you can think of this as like the real rates, right? It's the interest rates minus the inflation rate. So while the Fed funds rate is at 5.5%, the real rate is 2.4% because inflation is relatively high. I mean, you can see the inflation rate is at 3.1. So we're at a real rate of 2.4%, which is the highest it's been, since July of 2009, right? I mean, real rates have not been this high in about 14 years. So interesting little tidbit there to sort of think about. There have been a lot of other things that, of course, I could talk about, and it depends on how much we want to branch out into the various asset classes. I'm sure I can think of other things that I've been wrong about, that I've been right about, especially within crypto. But there's the S&P 500. There are precious metals. I've been relatively bullish on gold this year, and I mean, it seems like that is kind of hit or miss. Yes, it was a good idea, or gold has gone up this year, right? So congratulations, Ben, on being right about that. But in the grand scheme of things, if you look at the 12-month candle, it's up 13%. I mean, hell, the S&P is up 24%. So, I mean, it's like, do I want a cookie for saying, hey, I'm bullish on gold when it went up 13%? When the S&P 500 went up more than that, right? So, yes, I was bullish on gold this year. And yes, it technically went up. But I'm not really sure it's worthwhile to pat yourself on the back for something like that when the S&P 500 went up more than gold did. And hell, the NASDAQ went up 53%, almost 54%. The highest it's gone up in a single year since 1999, where it went up over 101% in a single year. So, yeah, I mean, sometimes you can think about, all right, well, it was a good idea to be bullish on that. But to be honest with ourselves, we'd have to say, yeah, it was a good idea to be bullish, but what about your opportunity cost? You could have just parked it in the index and you would have made more money than parking it in gold. So that's one of those things where it's like, yeah, technically it was right, but no one cares. No one really cares, and why should they? I mean, what was the point of being bullish on gold and again, I mean, I still remain bullish on it, but what's the point of patting yourself on the back when the S&P 500 drastically outperformed it, right? So I think it's important. And you think about it, that's why I talk about opportunity cost, right? That's why I talk about Bitcoin dominance so much. You know, a lot of people don't really understand why I talk about it, but it's like, you know, do you pat yourself on the back because an altcoin went up 20% or 30% when Bitcoin went up 150%? You could have taken on less risk, gotten more reward. And yes, I mean, I get that a lot of people will compare what the altcoin did over the last couple of months and say, well, look at what it did from this low. But yeah, like what if you had DCA'd that altcoin throughout the entire year while it was bleeding? It's gone up over the last couple of months, so you've gotten some of your money back, but probably you would have just been better off in the most part, for just sticking with Bitcoin. Yes, there's some altcoins that drastically outperformed it, and that's always the case. It always will be the case. I'll probably say the same thing next cycle as well. And when some altcoins outperform Bitcoin, people will say, well, look at this. And I'll be like, yep, it always happens, you know? So that's just one of those things that does tend to happen. You know, as far as the S&P 500, I mean, my general views on it back over here were that we would get a seasonal Q3 correction, about a 5 to 10% correction, which was right. Once we got over here, I said it'll likely rally up into the end of the year. We got favorable seasonality. We got Yellen issuing shorter duration, the market sniffing out a Fed pause. Yes, it's rallied. But where I was wrong was it's easy to say this part, you know, I can say, okay, I think I did pretty well on this part right here. Actually, let me be a little bit more honest. I think I did well on this part right here, but this rally right here was not something, you know, that I was necessarily anticipating, right? So from here to here, that was not something I thought was going to happen. So the move that took place from like 4,200 to 4,600 was not correct. Like I did not think this rally was going to occur. I was open to the idea of it going up to 4,300, so like right back up to here back then. So I thought 4,300 was possible. So to rally back up to that level. But once we got above that, up to this level, that extended beyond what I thought that rally was going to extend to. So I would say that, you know, in that regard, while I feel like I got this part pretty good, the rally is sort of the rally that started in March and extended all the way in through basically late summer. I did not anticipate, but I don't really know why I didn't. I mean, I should have. I really should have, especially considering that pre-election years tend to be pretty good for the S&P, right? In fact, if you were to switch this over to Apple, if we were to look at Apple and we were to just simply look at Apple's returns in prior pre-election years, I mean, it did what it always does. Did it not? It did. So the blue line is Apple year-to-date 2023. The blue line is 2023. The orange line is the average of prior pre-election years going back to 1981. I mean, we can look at this and say, look, I mean, Apple did what it's always done in pre-election years. So, yeah, I didn't really expect that rally from 4,300 to 4,600, but in hindsight, probably should have, especially given that it was a pre-election year. So I'd say that kind of wraps it up with the S&P 500. I mean, I don't really talk about the S&P 500 that much. Probably about one video every month or so on average. I think recently it's been a little bit more frequent than that, but that's sort of my view that was sort of my thoughts on the S&P, right? Thought it was going to grind a little bit more down here. Wasn't expecting that rally. Once we got that rally, I said, all right, probably time for a 5 to 10% correction and then a seasonal move back up into the end of the year. So the bond market, and again, some of this stuff you might say, well, how does this relate to Bitcoin? I think everything's sort of all tied together. I mean, the bond market is a very important aspect of even the cryptoverse. And if you look at something like TLT, I was actually, and I don't really know how vocal I was on the public channel, but on Into the Cryptoverse on ITC Premium, which I talk more about other markets and I'm a little bit more vocal. I thought this was going to go down, and I really did. I was very vocal about it potentially bottoming out between 80 to 85. Okay, now this is one of those things where like it's probably premature to say that I got that right. As much as I would like to say that I'm right about it, it's probably premature to say that. And the reason I would say that is because yes, it has had a bounce from the 80 to 85 region, right? And I feel pretty good about that because this is something I waited on for basically the entire year. I was like looking at this, and the reason I did not turn bullish on it until here was because I really did not think higher for longer had been priced in. But going into the summer, when I said the S&P 500 would likely get a 5 to 10% correction, that was on the back of me also thinking that bonds were going to drop too as the long end of the yield curve went up. That happened. Higher for longer got priced in. I think TLT potentially bottomed here at around 82. That is something that, at least in the short term, I think is right. But if we were to fast forward throughout all of 2024, there's still a lot of work to go to actually prove that that's the bottom. We could always come back down and retest it. In fact, there's a lot of times when TLT is forming a low, it'll go back down and retest it. And sometimes it even puts in a slightly lower low, right? I mean, so you could see something like that play out, but you can see oftentimes when lows are found, TLT will then eventually retest that low. So I don't know if this will stand the test of time or not, but 80 to 85 was my general zone for a bottom on TLT. So at least in the short term, I feel pretty good about that. And I think the reason why it's worth paying attention to stuff like this, even though I think most people watching this video, they probably really have no interest in the bond market. The reason I think it's worthwhile is because oftentimes when the bond market bottoms and gets a big rally, in the short term, it's bullish for risk assets, right? In the short term, it is. But here's an interesting thing to consider. Is the S&P up fundamentally, or is it up because the bond market is up? If you look at TLT, you can see that it's actually up 20% since the October low. 20%. Since the October low, the S&P is only up about 16%. So you really have to ask yourself, well, why is the S&P up? Is it up? Is it up just because the bond market is up, which is what normally happens after the bond market gets a bounce? If you were to go back and look at, if you were to go back and look over here at, well, I guess I need to pull back up. Let me throw on here the 10-year yield, right? So if you were to look at the 10-year yield, where did it top out? Back over here, you can see it topped out in June of 2007. And the market, it did get a brief sell-off initially, but it still rallied for a while. If you go back before that, you can see that when the bond market, when the 10-year yield topped out right here, the S&P still rallied for several months. And then the issue is if the bond market if the long end of the yield curve continues to drop, that's where it becomes a problem. There's no guarantee that it's going to play out like that this cycle, but I'm just saying in the short term, when the long end of the yield curve drops, is bullish for risk assets, right? And that was why going into the end of the year, I said, it's likely bullish for both stocks and bonds, because if bonds are going up, meaning the long end is going down, it's going to sort of alleviate some of that pressure on the stock market and allow for risk assets to go back up. So that's something I think I generally got right. Something that I've got wrong. I mean, hell, I've mentioned a few things that I've gotten right recently. Let's talk about something I've gotten wrong, because there's no shortage of them, right? There's certainly no shortage of them. So the Ether USD valuation is higher than I thought it was going to be by this point in the year. It's currently at around 22.82, which is higher than I thought, right? I mean, honestly, it is, and I'm not going to pretend like it's not. My assumption has been that eventually it'll return to the logarithmic regression band, but it hasn't done that, and there's no guarantee that it will. But you can see that Ethereum has essentially told me off every single time it's even gotten close to it, right? Every single time it gets close to that band, it just bounces. It bounces off of it. And so that's something that I've not been right about. I'm not going to pretend like I've been right. I haven't. My counterpoint as well, I mean, my portfolio was Bitcoin heavy, and Ether Bitcoin went down. So while I don't really have a lot of exposure, I haven't had a lot of exposure to Ethereum in 2023. I had exposure to Bitcoin, and Bitcoin went up more than ETH. So that's kind of how I rationalize it. But in terms of just being right or being wrong, um, I've been wrong about the Ether Bitcoin valuation so far, right? It's been slowly grinding higher. You had a low here in June, another low right here, and then it's bounced again. And again, every single bounce has been off the regression band. I mean, we'll see in 2024 if we finally visit it, or if it just continues to you know, just stay just above it or not. But that was something that I think it's pretty safe to say I've been wrong about. And I think if you've watched this channel in 2023, you'd be like, yep, he was wrong about that. You know, Ether Bitcoin went down, Bitcoin dominance went up, but Ether USD went up. Obviously, I mean, Ether USD went up because Bitcoin went up, right? I mean, like if you think about it, Bitcoin dominance went up all year, Ether Bitcoin went down all year. But if Bitcoin did spend half the year going down like that other theory had panned out, then I imagine Ether USD would be lower. But Bitcoin has a way of lifting everything up, right? If Bitcoin continues to go up, then it can lift Ethereum higher, even if Ethereum is not keeping pace with, even though Ethereum did not keep pace with Bitcoin this year, it did go up in terms of its USD valuation. So that I think is something that's fair to say that I was wrong about. And we'll see together in 2024 if it finally drops into the regression band, or if it continues to basically say nope, just kidding, for another year. I'm trying to think about some other theories. I mean, I know the minute I end this video, I didn't really have this planned out, honestly. I just came downstairs and decided to make the video about this. I'm trying to think about things on the fly. And I'm sure the minute I end this video, I'll think of probably like 10 more things that I could have spoken about, and probably things that I got wrong rather than I got right. As I said before, it's easy to sort of think about things that we got right. Harder to think about things that we got wrong, especially because we don't want to be wrong. We want to think about what we got right and try to chase the clout that comes with that. But at the end of the day, I mean, I don't really care that much about that stuff. I just want to provide an opinion on the market, and sometimes I'm right, sometimes I'm wrong, and that's that. So I don't think there's anything else really that is worth discussing. I mean, in terms of where we are going into 2024, the main thing that I'm looking at right now, obviously I'm still watching Bitcoin dominance, and there's theories either way. To be completely honest, right? I mean, I think you can come up with a theory either way for 2024. Oftentimes, in halving years, Bitcoin dominance doesn't go up too much more. It does go up some, typically. Like the yearly open for Bitcoin dominance, at least the last couple of times, it did go higher in the last two halving years. A little bit, not a lot, just a little bit. But then the counterpoint is that last cycle dominance didn't top until after rate cuts began, and we haven't even reached rate cuts yet. So I think there's, the low-hanging fruit on the dominance move is come and gone. But in terms of figuring out where dominance goes from here, it really depends on what is more important, right? Is the cycle, like, is that the cyclical behavior, is that more important? Which you could argue that it is. Is monetary policy more important, right? Like if you look at interest rates, dominance topped over here in September of 2019. That's why a lot of people thought the dominance had already topped by June when it didn't go higher in September. But you can see that dominance put in a new high in December, right? A new high in December. And so, the question is are we in this move right here where it's kind of like getting a pullback before it gets one final big push to the upside? Or are we here, if we go back to metrics for the Cryptoverse and let's just look at dominance of Bitcoin. If you look at 2012, I mean, 2012 is not really that interesting. If you look at 2016 and 2020, that's what dominance did, right? So in both years, dominance did take out the initial high, but not very much higher. So there's that view on dominance, but then the other view is that, is the 60% idea still relevant? And I think it really depends on if monetary policy is sort of what rules it, or if it's more of that cyclical behavior, right? So, I mean, and we also, I mean, there's definitely a narrative we can come up with, right? I mean, like you do have potential approval of the spot ETF that could occur in the next couple of weeks. So maybe you get a surge in Bitcoin dominance early in 2024, and then it fades, or maybe it does the reverse. Maybe it does the exact reverse of that and fades, and then goes up later in the year, like it did in 2020. That's another potential outcome. But another way to look at this move by dominance is to include Ethereum dominance in it. And that's actually one of the most interesting charts right now to me, is this chart right here. And the reason this chart is interesting to me is if you look at Bitcoin dominance plus Ethereum dominance, which I want to sort of talk about it as the blue chip dominance. I think Ethereum is a blue chip. If you're a Bitcoin maxi, I'm sure that offends you, but I don't really care, right? Like, it's my channel. A lot of people, half the people that watch me think I'm a Bitcoin maxi because I've been bullish on Bitcoin dominance. And so they call me a maxi, but I'm not one. The other half, they're maxis. They think I'm a maxi too. So when they find out I'm not one, they get pissed off. So basically, I'm really good at pissing everyone off, because I piss off the people that are maxis that think I'm a maxi, and then I piss off the people that are not maxis. But again, I think Ethereum, if you look at Bitcoin dominance plus Ethereum dominance, what you'll see is that just before rate cuts began last cycle. So look at this. You had rate cuts start in July of 2019, right? And just before rate cuts began, the dominance of Bitcoin and Ethereum hit a local high at 73%. And then after hitting that local high at 73, it came all the way back down to 67. 73 to 67. What just happened? Local high at 73, pull back to 67. Same exact thing, right? And you might say, well, Ben, this time is different, because when this occurred last cycle, it occurred in May. This was May, and then this was June. Whereas right here, this is December, and perhaps it's trying to find this local low here in early January, right? So you might say, well, it's different. This occurred many, many months before. But then the counterpoint is it really different if this is more dependent on monetary policy? Again, this pattern emerged right before rate cuts began. Market thinks rate cuts are starting in March, right? So if I were to draw a line from March, so let's just draw a line where March is on here. Let me get the week too. I guess it's late March, March 20th. So if you were to look at March 20th on the charts, this is the week of March 18th right here. So that would include March 20th. That's March 20th. So I wonder, right? Like, is it repeating that pattern where, it goes up to 73%, goes back down to 67, 66, 67, and then gets one last major move just as the rate cuts arrive? If it did, you can see that this move here started in June, and it lasted from this low here, right? From this low right here, I guess it was late May. It lasted, I guess it really topped, let's see where it topped. So that high was 80.26. This one over here was 80.31. So it lasted 14 weeks. Okay, it lasted about 14 weeks before it topped. Yes, it went on another run much later on, but that was basically a year and a half later. Let's just talk about, in the next couple of months, right? So top, low, 14-week rally to end the blue chip rally, right? And it ended right as rate cuts arrived. So if you had a surge of this metric over the next 14 weeks, that would put you the week of April 1st, right? Which is interesting because, again, here you can see that the blue chip dominance topped right after that first rate cut. And if we do get a rate cut in March of 2020, or if we get a rate cut March 20th, then you have to wonder, will it play out in a similar way? I don't know. You could also maybe make the case that what about this over here, where it went up to 73% and it did not stop at 67. It actually went all the way back down to 62% before it got another bounce up. So you could point to that as well, right? I'm just saying, if you look at monetary policy, right? If you look at interest rates, and you see where the dominance got that pullback, it's like basically what happened. The market anticipated rate cuts coming, and when people anticipate rate cuts, the long end of the yield curve falls, or the yield curve, maybe not the long end necessarily, but the yield curve, the short of the yield curve starts to fall. And what happened? Blue chip dominance fell. The problem is that while the market starts to price that in, it's not necessarily enough rate cuts to move the needle, and then the blue chip dominance just comes right back until the rate cuts really get underway. So I just wonder if something like that is playing out again, or if it will be completely different. So I did want to at least say this is a chart that I'm really interested in right now, the blue chip dominance, and we'll see if it plays out in a similar manner like it did last cycle, or not. So from there, what else is there to talk about? I mean, I think that's mostly it. You guys know, I feel like I was fairly honest about what I was wrong about, fairly honest about what I was right about. I'm not trying to take any, credit for anything. I just want to provide my opinion, and that's it. I just think that doing these videos, especially at the end of the year, it's a good way to reflect on what went well, what did not, and to not care so much about what other people think, because there's always going to be someone there to dunk on you no matter what. But to just say, look, these are my views. These are the ones that panned out. These were the ones that did not. I hope I can take those lessons into future years and apply those, become a more humble investor, and so on and so forth. So that is the purpose of this video. I hope you guys enjoyed it. Again, it's probably more for me than it is for you. Thank you guys for tuning in. Subscribe, and I will see you in 2024. Bye.